Okay, I guess it's time. So, good morning, everyone. Welcome to the London Open. Well, 15 minutes into the London Open, but welcome to our stream. Now, where do we start? It's Friday. We don't have anything that I would consider as very significant in the US calendar. Let's just review some of the things that we saw from yesterday. Okay, we didn't have any session yesterday, but we did get some US data, and these were durable goods numbers. The numbers came out strong, surprisingly strong, in fact, but I wouldn't say that they've had a large impact on the market because the markets right now are still all about, who? It's still all about Donald Trump. And what's the latest from Mr. Trump and his trade war? Basically, he was saying that there have been talks at some level. Okay, so when you say at some level, perhaps very low key, very low level between the U.S. and China. The Chinese said no, there's no talks going on. But earlier in the Asian session, we did hear from the Chinese, and the Chinese said that they are looking at lowering some of the tariffs that they've imposed on US goods. So market reacted, and earlier in the day we saw the dollar strengthening across the board. We saw gold easing off a bit on the idea that perhaps the worst of this tariff war is over. But you know what, folks? I've been listening to the news, and if you're an American, if you're someone in the US, uh, you're going to have some problems in about 2 weeks' time. So, anecdotal reports says that there are no ships arriving in US ports. Okay, and anecdotal report says that there's a pileup of containers. Well, not a pileup of containers, but there are a lot of ships, okay, in China that are just anchored, moored near the ports because there are no exports going on. Nobody's shipping anything to the US. And apparently, this is expected to become a problem at the retail, at the consumer level in about 2 weeks' time, because people are saying, since most companies now use just-in-time inventories, whatever stock there is for consumer goods would probably be running out by starting around the 10th of May. Okay, at least your supply specialists, your logistics people are saying this is already happening. This is what's going on. There are no ships leaving China, and there are no new, or there are less and less ships that's arriving in US ports. So if indeed these anecdotal evidence, these talks are true, then people are going to see some pain, okay, in about 2 weeks' time. And how does that relate to us? Well, I think at that point you're going to see some crazy again out of the US, out of Mr. Trump. So yeah, let's see what we can do for today. But let's just remember, or let's keep in mind our issue 2 weeks from now. All right, so having said that, guys, let me now turn to our charts and see what we've got in our charts. So what do we have, folks? As we said earlier, during the Asian session, we had the dollar strengthening. Okay, but really, details of what the Chinese said indicates that they're going to roll back some of those tariffs on a limited number of goods and not on everything. So the war is still ongoing. They're essentially choosing products that are critical for the Chinese. So it doesn't mean that things are over and the US won. So it's not a guarantee that you should be looking for a stronger dollar henceforth. Okay, not really. Now, what do we have as far as the calendar is concerned today? Again, no data out of the US. You have Canadian retail sales later. Of course, Canada is also another country that has an ongoing tariff war with the US. Let's take a look at the loonie later. But for now, let me start as usual with our euro. So what do I have when I go to euro? Now, let me use this platform. So what do we have for euro, guys? This is the rally for the last the last 2 weeks in euro. And clearly we've pulled back. We've been bouncing off that 38.2 fib retracement level. We have not found enough momentum to push up again, to make a run for the 1500 level. We've been testing 1400 several times. We haven't quite seen markets hold on to above 1400. So what do we have now? Well, let me take a look at this on a daily scale. On a daily scale, what are we seeing here? I could almost say that you've got a piercing pattern in these daily charts. Piercing patterns technically are bullish reversal patterns, but the problem is there's really no big bear market before this pattern turned out. So it's not very convincing for me to say that this is something that we should be really going long in at this point. All right, what else is there for this chart? Let me go intraday a bit. For our picture, indecisive candle from the previous 4-hour period. Again, we are around the support area. We are around the 38.2 fib retracement. So one argument here is that, hey, look, you've got a good price level in euro. Normally, guys, you know me, I like breakout strategies. I like the London Open strategy, which is essentially a breakout strategy, because you tend to have liquidity, you tend to develop momentum during the open of the London market. I'm not one for pullback plays, but this chart is getting really interesting. For our picture, indecisive candles says, okay, if something is indecisive and you have a support just below it, it basically tells you, okay, you know what, likely we're just going to hold from here, and you should be focusing on getting excuses to come off the bottom of that support. So what I'm saying is, nice support level here. We've been testing that for a couple of days already. We've never really seen a huge break below it. So we should focus on intraday signals, indicators, or patterns that says you can use that. You can use a bounce off that 38.2 fib level. You can use a bounce off that 1320 level. So nothing immediate, at least nothing in the 4-hour chart that tells me go ahead now. Let me take a look at this on the hourly level. Hourly scale. All right. So is this a hammer? Well, the size of the body of the candle and the size of the tail for the candle are roughly equal. So that's not a very convincing hammer for me. All right, so no convincing hammers there. What do we have then? We have this high earlier from the Asian session. And I'm thinking, can we use a push above that high as an excuse to go long? Can we use an hourly close above it? Well, yeah, I mean, that would be something from a technical perspective. That would be a good uh, chart trade. Close above that 1357 area on an hourly scale, break this level, and I could argue that market is basically playing this wide range from the 1400 level to the 1300 area. So push above that 1357 level, and I'm thinking test that 1400 level. That's our objective. Okay, so that's one way of joining the buy side for me. Are there other ways or other signals that we would consider? As always, I tend to think that if you end up with hammers, a real hammer, okay, that candle from 2 hours back, I wouldn't really consider that to be a real hammer. Okay, I want that tail of the candle to be really long for me to say something is a hammer or a dragonfly doji. Okay, you don't want to have a body that's almost equal in size to the wick or the tail of the candle. That's not very convincing. You know, to be honest, I actually almost got FOMO'd with this candle that we're looking at right now. Before we started, I was thinking, this is moving fast, this is moving fast. I was about to go long, and then I realized, you know what? Better to just wait until the London market opens. So remember that FOMO, fear of missing out, and that's a problem that most traders have. Okay, never allow yourself to be caught by FOMO. Okay? Never allow yourself to be affected by a market that's moving. Always remember that there will always be a market the next day, the next week, maybe the next hour. There's something for you to do. Okay, that was because if I had jumped in earlier, that was a bad idea, or that would have been a bad idea, given that I have the consolidation high there around 1357. And also, if you look at your chart, you'll notice that you have your consolidation yesterday during European and North American trade, and the floor of that consolidation was around 1357 level. So we are well resisted at 1357. Give me a close on an hourly scale above it, and yeah, I can consider buying it. Give me something like a hammer from here around 1320, and sure, at that point I could go long, say that my initial target would be 1357, and then probably see if I can get 1400. Now, technically, average range for euro right now is what? Let me take a look. Let me add your ATR. Let me go dailies. So average daily range for euros about 146 pips. So there's room to maneuver. In fact, it's possible that we can get a push above 1400 today. If our low is at 1315, then it's possible that we could be talking about 1450 Although let me see if there's anything at 1450 from the charts. Well, chart wise, you have this from Wednesday. The high from Wednesday is around 1442. So we could be talking about getting there, but we do not have the elements that says go jump in now. All right, we now have the open of London, and look at your charts. You have a bullish crossover in your hourly stochastic, and you're once again trying to take out 1357. Your candlesticks tells you I have a bullish bias, but I'm indecisive. Look at how big that wick here is. Look at how big that wick is. So under these circumstances, it's best to wait for a close above 1357. If you're really itching to go long, as I am, okay, I admit, FOMO is right there at the back of my mind. How do we join this? Well, we could go lower time frames. We could think of it as, okay, let me scalp my way towards 1400. Not really the best idea, but it is something that we could do at this point, given that you have London markets open already. You should be seeing liquidity coming into this market. So let's do that. Given that, well, I'm not going to jump in immediately, but let me take a buy stop above that 1357 level. Okay, let me just adjust the size of that. So I'd love to go long. A break of this consolidation highs would do for me. Your range for now is at 1315. So you've actually had about half of your average daily range. You've had 75 pips of price action. Let me drag that buy stop a little bit lower, just above the high there. You don't want to use an exact figure. Ideally, your stop loss for this would have to be below the low for the day. But as the trade progresses, we will be adjusting. Of course, if you're looking at, so ideal target for you if you go long on this one would be to try to see if you can hit that 1442 level. That's the high from, again, that's the high from Wednesday. That should give you average daily range. Okay, get there. Now, given that you have resistances at 1400, I would say the plan for you ideally would be to try to take some profits as you hit that 14,400 level. So let's do that. If you're using CTrader as your platform, you can go modify. Oh, sorry. I actually have to wait for my trade to be executed, and then at that point I'll be able to use the advanced trade management features of CTrader. So I can't do anything immediately. This is happening. We've got a buy stop, hoping to get momentum along with the open of the London market. Okay, why is it that you normally expect to have momentum in the London market? Simply because you've got more traders at that point. You've got more people making decisions at that point. You've got Asian traders thinking, I want to go out. And then you've got European traders thinking, what's my trade for the day? And those guys will be trading against each other, with each other, and that creates volume that gives you momentum. But let's take a look at something else. And that's something else. Let's take a look at gold, and then let's take a look at the Canadian dollar in preparation for the data to be released later. So what do I have when I look at gold? So here's gold. I actually had a nice discussion with a friend of mine earlier about gold, and we said that, you know what, if Trump is really through with his trade war, we ought to see a steeper pullback in gold. We ought to see gold dropping below 3,000, but we're far from that. We're far from that happening. What I am interested in right now in gold is the fact that we have prices coming off 38.2 Fib retracement level. It's all right. So what do we do in gold? Let me go intraday again. Okay. So nothing very nice in gold. I've got, okay, so I guess one question is this a piercing pattern? If you look closely, the previous hourly candle closed below the midpoint of that big bearish candle, so that's not a piercing pattern. That's not something to be excited about, which means that this is not something that we should be going long immediately. Also, take note that you actually have resistances coming up around 33.16. That was sort of a consolidation floor from yesterday. So no immediate action in gold. Again, don't do FOMO. Push above it, and that would be a different story. So you take me through that level, that 33.16 area, and I'd be willing to go long at that point. I'd say that we have returned to your previous consolidation zone, but this is not the price to jump in right now. Okay, I would say whoever's buying this at this point, just let them be. We are retail traders. We do not take we're not the type of traders that would build their positions into a trade. Okay, there's a very big difference between someone who trades 10 lots, 5 lots, and then someone who trades 100 lots, 1,000 lots. People who trade in the hundreds, they do not enter the market at a single click. Okay, so normally it's those guys who start moving the market. They have a definite view on what's going to happen, and they start building their positions. But we're not those kinds of guys. We are small fry, and as small fry, we would want momentum to be with us. Again, that means breakthrough a resistance, or maybe again, if you give me, you start giving me, I always like hammers and dragonfly doji, so start giving me this, and I would go long in gold at that point. Could we place a buy stop? Yeah, that would be a good idea. Not me though, since I'm committed to Euro already, and I've got my numbers to watch out for. So nothing immediate for us. How about selling this? I just don't see any reason for a sharp dollar recovery. We've tried that before. We've pushed under 38.2 Fib level, but look what happened. It failed to generate momentum. It pushed back inside. So no sells for me, even if there's a break of 38.2 Fib. I just don't see the environment for such a move, for such a thing happening. And looks like we've lost momentum already, so yeah. Let's take a look at your Canadian dollar. So what did we say about the loonie? We've got data from Canada later. These are retail sales numbers, and we're actually looking for poor retail sales numbers from Canada. I'm thinking we have the dollar that's really on defensive, and uh, we have the dollar on the defensive. Canada as well, some having issues, of course, because of what Mr. Trump's doing. We want to maximize the impact of any bad number from Canada or even any good number. So what do I mean here? I think that looking at a Canadian or USD CAD trade is not such a good idea right now. Of course, it had a big sell-off in USD CAD already, but again, market is expecting some bad numbers. We want the other currency in this trade to be something that, should I say, is strong or at least has been exhibiting some strength recently. So let me take a look at the charts. They've been pretty strong in Aussie, although okay. Well, the Australian dollar has consolidated for the week, but look at that. So we could say that Australian dollar, maybe there's some buys there. Or your cable, GBP is also a candidate. In fact, even your euro is also a candidate to trade against the Canadian dollar later. So let's see. Let me pull up a chart for Canadian dollar. What do we have, guys? Dollar CAD. Let's go symbols. Let's go look for a CAD pair. Let's add Aussie there, Aussie CAD. Let's add Euro CAD. Let's add GBP CAD. Okay, actually, I'm thinking if there's going to be risk aversion, an even better choice might be Canadian dollar against the Swiss franc or Canadian dollar against the Japanese yen. Let me just see if I have that kind of chart. Okay. All right, I have CAD Swiss and CAD yen. These might be better choices given that the Japanese yen and the Swiss franc are considered to be haven currencies. And if we have bad numbers from Canada later, that might be a more interesting trade. But let's see what the charts are showing us. Let's start with CAD yen. Okay, CAD yen. What do we have in this chart? Let me put some ATR here. All right. Average to range for this. It's about $1.449. Okay. And what's OHLC? Or rather, let's get the high and low for this. All right, guys, looks like our buy stop has been triggered. So let me just skip a bit. So our buy stop in euro has been triggered. Let's see if we develop momentum. Let me go lower time frames. Okay, I definitely want a close well above the high for the previous candle, because that's ominous looking. But oscillators are telling you that you have an ongoing breakout happening here. You want to see your charts above that resistance level when your stochastic already pushes into overbought area. That way you can say that a trend has developed in the market. Okay, we don't have that just yet. So let's get back to that Canadian chart. So as we said, average range for the Canadian dollars about $1 and 44 cents. 1 Canadian dollar, sorry. For today, your price action, let me see. Your high is at 103.66, lowest at 102.81. So you're basically talking about having had about 80 cents of price action. So there's still room to maneuver. What else? Price action wise, looks like you've been coming off this very nice support level around 101.66. We can say that that's your range for the past couple of weeks in Canadian dollar. We go lower time frame. And we are in the process of taking out or of pushing through this resistance area. But looks like we've actually gone back in. So not in an immediate position to do anything then. But let's examine this further. Hourlies. Ooh, okay, that's bad. All right, guys, so, well, you've got the Japanese traders, I guess, coming out of the market now. End of the trading day for them and all. But you do have traders from Canada, from Europe, from the US. Well, maybe not the US just yet, but you probably will have some Canadian traders monitoring the data later. So what do we suggest? I guess nothing immediate at this point. But if your Canadian data comes out bad, okay, consensus, let me see that again. Your consensus forecast for retail sales is a slight contraction. Core data minus 0.1, headline data is minus 0.4. So if the numbers come out really below that minus 0.4, minus 0.1 level, then that's going to be bad for the Canadian dollar. So you know what? That's actually argument that says this range here, this range play is likely going to continue, and this is going to go down. But that's like 5 hours from now. So no immediate action for us. Wait for the data. And again, if the data comes out really strong later on, or rather really bad later on for Canada, then that's an excuse for you to say, continue this consolidation, test that 102 40 area, maybe even break below it and ease back down to 101.43. Now, why does this happen? Well, we're talking CAD yen here. And one of the things that we have to remember is that the Japanese currency is considered to be a haven currency, which means that if things are going bad elsewhere, okay, normally you have three currencies that investors turn to if bad things happen around the world. That's the US dollar, that's the Japanese yen, and that's the Swiss franc. Okay, these are what's called haven currencies. But right now, because of the uncertainty that Mr. Trump has generated, the dollar has lost that cachet, the idea of it as a haven currency. So nobody's looking at the dollar as a nice haven currency at this point, which means that you have to find alternative, and the alternative is either you go Japanese yen or you go Swiss franc. Japanese yen, typically the way it's quoted is if things are good for Japan or if things are bad elsewhere, currency pairs that have the Japanese yen to the right of that quotation, okay? Remember, that's CAD yen, which means that for every one Canadian dollar, you will have to go give up 100, where are we? 103? 103 yen. So if yen is strengthening, that number actually will be going down. Okay, if the Japanese yen is getting stronger, that number is going to go down. So if you have bad things happening in Canada, if retail sales numbers in Canada come out poorly later, then that becomes an argument for people to say, okay, this is going to drop, this is going to go down to the 102.40s area, maybe even a drop below it. Okay, if you have bad news from the US, then that could contribute to the notion of easing down towards 101.20s, 101.43. So, but what if you have good data from Canada? Well, that would be interesting because, as we said, we are far from seeing average daily range in CAD yen. There is room to maneuver. You're actually seeing an attempt to get out of this range. So good Canadian retail sales tells you the Canadians are still buying stuff. They're still confident despite the trade war that's they have going on with the US. And that becomes argument for you to say, okay, let's go up. Let's go test that 104.72 area. So I guess at this point, guys, you'll just have to wait, see what those numbers are, and that data will be coming out in about 5 hours time. Okay, so let's not touch this at the moment. So let me go back to overview then. Okay, we can take a look at the Canadian Swiss franc pair. Maybe it's even it's a better looking chart. It does look like it's a better looking chart. So average range for CAD Swiss is about 95 pips. And for the day, how much price action have we seen? So you've seen about 49 pips. Okay, so you're slightly above half of your average daily range. On the dailies, it looks like you've managed to see a breakout from this consolidation here. Let me drag fibs on this one. I don't think that this looks good. All right, so it looks like we are trying to, or the chart is trying to get towards this level, just above your 61.8 fib retracement. Again, you have half your average daily range. So again, just like in your CAD yen, CAD Swiss has the same argument. You end up with strong data from Canada, and that's argument that says go look for a push higher, take out that 0 point, let me just see what the number is. Take out that 0.6006 level. So just to say 0.6 area, take that out and see if you can make a run for this level, but end up with something bad and you expect this consolidation to continue if you have poor Canadian retail sales data. So let me go back big picture. And let me just switch to hourly charts. So for now, guys, what's happening? Looks like we are trying to generate some momentum in euro. Hopefully we do get the momentum. We are already a long in our euro. Gold, we don't have a nice candlestick pattern in gold that says an immediate buy, but we have a nice support at 38.2 fib retracement. So we just need a close above this resistance level to tell us that, okay, it's safe for you to go buy your gold already. Again, the other entry condition that I have for gold would be if somehow I end up with hammers or dragonfly dojis from the 38.2 fib retracement level. All right, guys, so I guess that's it for our session today. There's not much to move the market. It will well, you never know what's going to happen in the US. You never know what Mr. Trump is going to say later. So yeah, just cross your fingers and see if if he sounds like he's going to attack the Fed again, if he sounds like he's going to press his advantage, quote unquote, in the tariff war. And those kinds of news will always be bad for the US dollar. So guys, thank you for joining in this session. And for you, or for those of you who are in Manila, see you tomorrow in our bootcamp. All right, folks, thank you for joining.